We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index. We're going to read over an article and talk about what the charts are showing. If we're in a correction, could we be going into a crash? Or are we doing a real bull run here, or is this a bull trap? But before we break it down, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you want to get on early with us, check out the link down below in the description to the Discord. We strive for opportunities like these every single day. We look forward to having you join us. We're going to jump right into it with everything going on in the S&P 500 index and the volatility in the markets. So the home run of the day was spectacular and beyond expectations. And if you want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned this morning, and every single one of them gave 3 to 5%, 5 to 10%, and even up to 10 to 20%. But one of them turned out to be a home run. We caught this one with super low volume. It turned out to be one of our home runs on December 31st. Had a lot of hype behind it, and this is how it performed in a matter of minutes, guys. We caught it at $6 in the pre-market. It was under a bull indicator on Ultimate 42 Vision. It had strength on 42 Vision, and towards the bell, it continued pushing upwards. In just about 15 to 20 minutes, it hit a highest point of 30% plus, guys. If you want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord. We look forward to having you join us. And we're going to jump right into it here with these charts. So here we are with the S&P 500 index. And when you look at it from this angle, it looks like things are trying to get bullish again. But when we zoom out, things were pretty strong from 4,500 all the way up to 4,800, pulled back down to 45 and pulled back up. But this is how corrections begin, right? When you start seeing this, jump back up, and the possibility, it's not confirmed yet. We're going to see what's going to happen, and we're going to break it all down in today's video. But once it starts coming back down, going back up, going back down, and when you zoom out, right, and you look at this from the bigger picture, the continuation of the direction is downwards. And these peaks right here are the euphoric moments that make investors feel like there's hope, that things are coming back, and that things are getting better. And then when things pull back down, everyone is shocked and surprised on why is it falling? Why is it pulling back? What is going on? And we see it time after time. Like this correction right here, I mentioned it last year in November. It was coming and it happened. Then we came back up, then we fell back down really strong, and we got the Santa rally. That's how they set it up. They make it look really nice and look neat and look strong right there from the 20th all the way up to the 31st. But if you look at your portfolio during those days, if you had a lot of growth stocks or penny stocks, it didn't really move that much with this. So a lot of mega cap stocks right now are super frothy and super elevated. And the Federal Reserve CPI data is making this much more bearish every single time. Interest rates being risen. But then there's also bullishness. And we're going to look at it in this article right here called Get Ready for Both FOMO and Fear. Says Evercore Strategist. Here are the heights and depths that the S&P 500 could reach, guys. So we're going to break it down. And we're going to look at it together here. And by the way, if you see this here, bulls and bear indicators, and you are not aware, it's your first time coming across this channel, that is 42 Vision. You can now gain access to it. The link is down below in the description to the 42 Vision indicators. You'll gain access to the daily watch list, weekly watch list, a community of investors all looking to learn and grow together, as well as the premium indicators to receive the clarity you deserve within the volatility to maximize on opportunities and remove the guessing and focus in on what really matters. So when we pull up the 4-hour here, you could see that it's sending out a bull indicator as well. Usually once these white with red borders pop up, there tends to be a reversal. It did it here, Look how strong this one was. It did it here. Look how strong this one was. Last one that happened here as well was back here on July. And look how strong this one was, right? It went from 4,200 to 45. Some are smaller than others. Some are stronger and bigger than others, right? So right now, this is trying to push back up on the 4 hour after being under a bear indicator since 47, touch 45, bounce back up. Some people can call this here. It's not really a double bottom, but around this area, they both bounce off the same place, and that could signify strength. But a lot of people were looking at this triple top here earlier last month and the last 2 months. And also when you look at that triple top and this one up here as well, that doesn't look so strong. It means some type of bearishness. And we had bearishness here. And right now we had slight bearishness that's trying to turn back into bullishness. So on the 4 hour, you could see things are trying to push back up. But when you put the 1 day, okay, it's a little bit different. Okay, it sent out a bear indicator right here at 4,700 all the way down to 45. It took a little bit longer to send it, and we're already reversing almost like it's trying to negate it. Now, this tends to tell you, okay, a little bit earlier than it should when things are bearish or bullish. And sometimes it's a little bit later, right? But you could see this bear indicator right here. It only lasted 2 days. Then it got a bull indicator, and look what happened the next few days, right? And the next few weeks. Same thing here. This one was on time, and then we got that bull indicator. Look what happened the next few weeks, right? But right now we're in a situation where this bull indicator on the 1 day could signify, right, a possibility of bearishness even though it's going up. If no bull indicator pops up anywhere along this push up, right, to the upside, then nothing's negating this. If anything, this is dominating right now, and there's no bull indicator, and eventually this is going to go into further weakness. So let's read here this article together because it's super important to realize where things stand, how elevated they are, and the worst case scenario is that this turns into a bull trap, and yeah, it gets a bull indicator, and as soon as it hits 4,819, 4,850, somewhere around that area between 4,800 and 4,850, and it rejects back down, that is going to be the biggest sign of bearishness moving forward. Okay, we have several days and weeks going into that all-time high and trying to retest it or break out of it. If it can break out of it, then there might be some strength, but this could all be short-lived if it doesn't get enough volume and if fear comes right back into the markets fairly quickly, right? And this leveling off right here is going to be important going into tomorrow and even the rest of this week if it's finally going to give out, if it tries to come up and reject, or if it's actually losing steam here and starts to fall again, right? And we have support levels to watch if that's going to happen. So let's look at the article and then we're going to talk about those supports. So to the upside, they're saying that it could actually go towards 5,567, okay? That is the average in this current bull market of 5% pace, and with gains topping out in June 2024, he said in a note to clients, okay? So there is something to be aware of. They're basically saying that this could be the upside, and it's going to be over the course of like 2 to 3 years at a pace about 5% all the way until 2024, because historically bull markets don't see such impressively large gains per month as the current 5% pace, so things may slow down. Now they're stating that the highest point in 2022 at the end of the year could reach 5,100, okay? And if sentiment could reach the peaks of 2000 in cyclically adjusted price to earnings terms, then S&P 500 could rally all the way to 550, right? 5,500, excuse me. So this is the average that they're actually constituting for a 4-year projection. So they're making it even more bullish than ever, but that's for the optimists. This is a little bit more realistic. If you do research, that's almost everywhere. Now, they talk a little bit about how the value of stocks historically thrive in an environment of high growth, inflation, and rising interest rates. So they expect a shift from value over growth is still in the early days. So right now they're saying that the value stocks are still, there's not a complete shift. It's just beginning and growth is going to diminish. And that's what we're seeing. Now, there's two ways to approach this type of market based off of what I've seen. I've been trading for 8 years now, and I've seen corrections and crashes, but tapering like this is something that happened only back in 2013. I've studied that year and I've looked over it, and value stocks, they're not going to move like growth stocks, and that's going to frustrate a lot of people, but they're going to move upwards. And bank stocks and different stocks that are undervalued. The growth sector, though, is going to take a beating. It may have its days that it jumps up a little bit. It may have its days that it kind of just, sits sideways and stuff. But at the end of the day, it's going to come back up eventually in the future. Once inflation is tamed, interest rates stable out, then all these growth stocks will be the big winners, just like what happened in 2020. I mean, if we go back, let's just go ahead and pick Square, for example. That's a great growth stock to just give you guys an idea of how growth stocks work and how it doesn't matter what environment the stock market is in. There's always opportunity, but one needs to be ready for how these opportunities work. So growth stocks, right, are like Square. 2016, 2017, 2018, there was a big pullback in December. It went from about $50 all the way down to $34. That was almost a 50% decline at that time. And then it just roared all the way up towards October 18. And then we got it all the way back down again. A big correction from $100 to $49, $50. And then you got this right here. Okay, sideways action. Now, this was due to the fact of interest rates rising, and also the end of 2017, there was a little bit of turbulence in the market. So when you put it all together, you're having these moments of corrections because there was some tapering that happened here, and interest rates were trying to be risen in 2018, and it actually hurt the growth sector. Look what happened from 2018 all the way to 2020, and look at the drop that happened in 2020. Okay, those that knew about all this experience here and the growth of Square saw an opportunity here, and it went from $37 all the way up to almost $300. Okay, but the whole entire consolidation period took 2 to 3 years and a crash before growth became predominant. Okay, we were in a very low interest rate environment. That hurts growth when that does not exist. The fact that it existed for the last 2 years, it helped it. Now, this consolidation of sideways action, that's what a lot of growth stocks are going to be in. Okay, they're not just going to rise up, but 3 to 5 years from now, if interest rates start to go back down, I don't think we're going to go as low as we went now, which was near zero. But if they go back down, eventually everything that's being diminished here and pulled back down will eventually go back up, and money will inflow into it, and more risk on investors will take a shot at the markets, and especially with these type of stocks, which are growth stocks. Now, we don't know the bottom of these stocks. We don't know if they're going to bounce back up, if there's going to be different behaviors. But one thing I can share with you guys is that wherever this stock finds a bottom and tries to come back up, it most likely will consolidate like this and never reach back up to the $100 highs. It took almost 2.5 years and a reversal all the way up to this point to recover from those highs and break out of it. Okay, so super important to understand how investing would work for those that are trying to go long on growth stocks. It's not going to be the same as last year. They may have their jumps, they may have their moments because of news, but no, it's not going to be a straight shot to the upside. Now, for the bears, there's either a prolonged pandemic, which hopefully that is actually not going to be the case, that things are getting better, or a spending debt economic hangover, almost like the one from World War II, and the end of the Spanish flu pandemic opens downside to $3,575. Now, if we go back to the chart on the S&P 500 index, okay, 3,000, right, all the way back to 500, 3,575, That is all the way back down here, guys. Like about this midway point right here. Okay? I'm not even going to use the 75. Around this area. That's a big drop, guys. That's a big drop. Are we going to see it in a straight shot? No, we're going to see it like this. And that's going to create the euphoria. And these peaks here are all bull traps. And if investors are not aware of how bad this could get, it's going to be a huge correction. Sometimes it could happen in a few months. It could happen in a year. It could last 2 years. Because if you go all the way back to the year of 2000s, right, there was a correction that lasted for nearly 2 to 3 years, guys. And it happened right here. Okay, we were at the peak in 2000, went all the way back down till 2003, guys. And look at the peaks I'm talking about. Look at the peaks, the bull traps, all these bull traps. So investors that are holding, they're not even holding stocks that they understand or know about, the clear direction is down. And they're going to end up caught up in a situation where either one feels like giving up or one doesn't know what they're doing. So in this video, I'm just here to share with you guys the possibilities to the upside and the downside and what I'm watching. And the main thing is 3,500 is a huge stretch. I could see possibly a 10 to 20% correction. Oh man, a crash would be big. It would be almost 800 points down from here, but which would be like about 3,900, just 400 points away from 3,500 like these analysis are stating. But right now to the upside, I do see the upside limited. I don't see it up to 5,500. There's like too many things that just hold down the market per se, but I could see this possibly pull back 10 to 20%, which would be worst case scenario from these levels all the way down to about 3,900, and the midway point would be about 4,200. So these are possible scenarios, and I would break it down like this: 4,500, 4,200, 3,900, and see how the whole entire market levels off. Does it find a bottom, and what's going on? And yeah, we could be in a correction mode. We don't know just yet. And if this does take off, I mean, it's just going to make it even stronger and better. But if it doesn't and it rejects anywhere up here or rejects around this area and we haven't seen it already and it's forming, you know, these are the support levels you want to be aware of, and this is the stuff you want to be prepared for. And most importantly, you're going to want clarity in the charts, just like what 42 Vision brings. Shows moments of bullishness, bearishness, bullishness, and so forth, as you could see here in the chart, and bearishness all the way down, to be able to maximize on the trading opportunities, because holders will not be rewarded in this market. This is a trader's market. That's just my opinion, not financial advice. And always, guys, if you want to receive clarity in the charts, check out the link down below to the 42 Vision indicators. We look forward to having you join us, and let's go ahead and make some money, guys. As always, thank you guys so much for watching.